Friends, today we will have small briefing on financing imports and foreign currency funding options. These are the very most important things while doing imports. Those funding options, what is the imports, all these things, how to finance the import, we will discuss in this video. And one more thing I want to tell you, in respect of Forex transactions, we should be very careful and we should be thorough with the rules and regulations of the FEMA and Government of India and also RBI guidelines. Okay, all these you have to note while doing any Forex transactions. Let us see the import finance products. One is fund based, another one is non-fund based. In respect of the fund based, one is rupee credit and then foreign currency credit, and in foreign currency credit there is suppliers credit and buyers credit. Whereas in non-fund based credit or finance, there is letter of credit and guarantees. So these are the import finance products. Now let us see the what is suppliers credit and what is buyers credit, and both are referred to as trade credits. Both are trade credits extended only for import payment, number one. Then the maturity period will be maximum 3 years. For normal imports maximum 1 year, and for capital goods up to 3 years. And interest payment as per the Reserve Bank of India guidelines, all in cost ceilings. And these are arranged by domestic branches. Okay, the suppliers credit or buyers credit. Extended from the banks of foreign offices and banks abroad also they can extend. And here it will be extension of the foreign offices and banks abroad depends on the based on LC, that is suppliers credit they will give, and based on letter of undertaking or letter of comfort, LOC or LOU, buyers credit will be extended. Now let us see the suppliers credit. What are the precautions we have to take? Banks in India, to ascertain from a bank in the supplier's country, suppose if the goods are supplied from USA, USA country's bank, we will ask the rate at which the usance bills, please note it, the rate at which the usance bills for the specific rate would be discounted by them. Number one. Number two, the underlying contract between the exporter and the importer should provide for usance drafts. Once again I will repeat, the underlying contract, what is between contract between the exporter and importer, we should provide for usance drafts. Then the LC, that is letter of credit, should be opened strictly in accordance with the payment terms of underlying contracts, please note it, and should be restricted for negotiation at concerned bank abroad. That is letter of credit should provide for bank abroad concerned to claim reimbursement only on the due date of the bill drawn under the LC. Only on due date they have to claim it. The rate of interest should be negotiated with the bank abroad, keeping in view of the competition. So these guidelines we have to follow. Let us see the diagrammatic representation of a supplier's credit. Here foreign supplier, importer in India, and a bank abroad and a bank in India. Let us see how it will works. Okay, foreign supplier and importer in India will have a purchase contract. Then importer in India will have a bank in India and he will open LC for bank abroad, okay, and LC is advised. Then you see, then foreign supplier, once he receive the LC, he will ship the goods, and sometimes he will discount the bills also at bank abroad. Then the bank abroad will claim with the bank in India on due date, just to see, and the importer pays on due date. Okay. Let us see the buyer's credit salient features. The buyer's credit is a foreign currency credit to the importer where there is no LC, that is no letter of credit, or letter of credit is already due. And the main salient features is within the overall limits already granted to the customer, or customer can apply in a local branch or loan processing and sanctioned in India separately also. So it should be applied with the local bank only. The local bank branch will issue a letter of undertaking, LOU, or letter of comfort to the banks abroad after limit sanction, and bank abroad pays the supplier directly. Okay, up to this point you understood now. Then local bank branch will make recovery and remit to the bank abroad on due dates. See what are the formalities we have to do in respect of the buyer's credit. One is the buyer's credit would be in the books of bank abroad, but the exposure in the rupee leg will be taken by the domestic bank branch. The domestic bank branch has to ensure that sufficient fund-based and non-fund-based limits are in place to cover the exposure of buyer's credit. So this is the responsibility of the domestic bank. Then short-term buyer's credit up to 6 months can be arranged on the basis of the LC limits also. But appropriate lien marking has to be made in the LC limit so that the borrower is not issued additional LC increasing the exposure. The buyer's credit for more than 6 months may be arranged either from the fund-based limits or segregation of the term loan limits analyzing the cash flow. So no withholding tax payable on trade credits. So these are the formalities at Indian branches in respect of the buyer's credit. Scheme is available is FCNRB loan scheme. It was introduced by Reserve Bank of India for financing working capital and term loan requirements of the resident customers out of FCNRB funds of banks. Banks have the freedom to fix interest rates, tenor and purpose of the loan. These loans not to be used for personal purposes and acquisition of consumer durables. That is most important. And Reserve Bank of India, Government of India permission is not required for sanction, but loans to manufacture and trading units depending upon their ratings. Loans can be in US dollars, Great British Pound, Euro and Yen, etc. And facility in designated branches only. Non-designated branches can arrange these loans from nearest designated branches. Here, swing facility is also available. This envisages conversion from foreign currency to rupee at the option of the borrower. That is swing facility. This facility can be built in proposal and approval of appropriate authority to be obtained. While taking swing facility, appropriate authority permission is required. Normally, conversion to take place at the time of interest resetting. If conversion to take place on any other date than irrevocable prior return notice may be required subject to payment of prepayment penalty. See the ECB, external commercial borrowings. The non-residents can make loans to the Indian residents in foreign currency. This is nothing but external commercial borrowing. There are two types of routes available. One is automatic route and the second one is approval route. In automatic route, prior approval from RBI is not required, and the authorized dealers or banks to process the application as per the norms and give approval and then forward the application to Reserve Bank of India, and the loan to be released only after Reserve Bank of India allots the loan number. Second one is approval route. That is, applications which are not within the automatic route norms, they have to go to the approval route. The external commercial borrowings, automatic route. Here, who are eligible? Corporates registered under Companies Act except financial intermediaries. Then non-government organizations engaged in microfinance activities subject to certain conditions. Then units in special economic zone, that is SEZ we will call it as, are allowed to raise ECB for their own requirement. Please note that individuals, trusts and non-profit making organizations are not eligible to raise ECBs, that is external commercial borrowings. Who are the recognized lenders for giving ECB, that is external commercial borrowings? One is international banks, second one is international capital markets, third one is multilateral financial institutions such as IFC, ADB, etc. Then export credit agencies, then suppliers of equipment, then foreign collaborators and foreign equity holders other than erstwhile OCBs. Purpose and end use. Permitted purpose and what is the end use in respect of ECBC. Here rupee expenditure and foreign currency expenditure. Here this should be used for import of capital goods, for new projects, modernization, expansion of existing units, existing production units. Let us see. New projects, modernization, expansion of existing production units in industrial sector, including small and medium enterprises and infrastructure sector, and overseas direct investment in joint ventures, wholly owned subsidiaries. That is also important. And acquisition of shares in the disinvestment process, obtaining license, permit for other spectrum and all these things, it can be used. And non-NGOs, non-government organizations engaged in microfinance activities for lending to self-help groups or for microcredit can be used. And what purpose the ECB should not be used? On lending, investment in capital market, that purchase of shares and etc., and acquiring a company in India by a corporate, and real estate. Here development of integrated township permitted under approval route, and working capital. So ECB should not be used. There are certain limits for rising ECB by the corporates and NGOs, that is non-government organizations, hotels, hospitals, software sector, and all these things. It should be, limit will be fixed by the Reserve Bank of India. Within that limit they can raise the ECBC, that is external commercial borrowings. Here the primary responsibility to ensure that ECB raised, that external commercial borrowing raised or utilized or in conformity with the ECB guidelines and Reserve Bank of India regulations, directions, circulars, is that of the concerned borrower, and guarantee, standby letter of credit or letter of comfort by banks, financial institutions and NBFCs raising the ECB is not permitted. All these guidelines we have to understand here. And prepayment of ECB up to certain limit is permitted without prior approval of Reserve Bank of India, subject to compliance with the stipulated minimum average maturity period as applicable for the loan. And refinancing of existing ECB, that is external commercial borrowings, by raising fresh loans at lower cost is permitted, subject to the condition that the outstanding maturity of the original loan is maintained. Authorized dealer category 1 banks in India, and ECB proceeds parked overseas until actual requirement in India can be invested in the following liquid assets. Which are the liquid assets? Deposits or certificate of deposits offered by the banks, and also deposits with the overseas branch of an authorized dealer bank in India, and treasury bills and other monetary instruments of 1 year maturity having minimum ratings by Standard and Poor. Okay, all these things we have to ensure. Let us have a small briefing on letter of credit. A letter of credit is an undertaking by the issuing bank on behalf of the importer in favor of the exporter, undertaking to make payment on presentation of the documents, subject to the condition that the documents are as per the terms and conditions of the LC. So this is a small definition of LC. Here LC is clearly defined in respect of Article 2 of UCPDC. It is defined as any arrangement, however named or described, whereby a bank, that is issuing bank, acting at the request and on the instructions of a customer, the applicant, or on his own behalf, is to make a payment or to the order of a third party, the beneficiary, or is to accept and pay bill of exchange drawn by the beneficiary. Second one, authorize another bank to effect such payment or to accept and pay such bills of exchange. And another one is authorize another bank to negotiate against stipulated documents, provided that the terms and conditions of the credit are complied with. So this is defined in Article 2 of UCPDC guidelines. Who are main parties of the LC? One is applicant or opener of the LC, buyer or importer on whose request the LC is opened. Then opening bank, the LC issuing or opening bank which opens the LC on behalf of the buyer or importer. Next, beneficiary, LC in whose favor it is opened, is supplier of goods or exporter. So he is the beneficiary. Then what is advising bank? The bank authorized by the opening bank, please note it, who on a receipt of LC forward the same to the beneficiary. Advising bank is liable for ensuring the authenticity of the LC. So this is the main function of the advising bank. Then confirming bank. Bank authorized by the issuing bank to confirm the LC. The confirming bank and its guarantee and undertakes to negotiate and to pay subject to submission of stipulated documents and compliance of terms and conditions of the LC. So here up to this point, let us say one is applicant, second one is opening bank, third one is beneficiary or exporter, and fourth one is advising bank, then fifth one is confirming bank. Thereafter, negotiating bank. The bank which negotiates the documents, it may be confirming bank or any other bank. Next, paying or nominated bank. The bank which arranges reimbursement, paying the bank could be other than the issuing bank. Correspondent bank. The bank with whom a foreign currency account is maintained for remittance and drawings. Drafts are drawn on them, LCs are advised and confirmed by them. So, these are the different terminology. Now, let us see the different type of LCs. One is revocable LC. An LC which can be amended or cancelled by the issuing bank without prior notice to the beneficiary. Please note it. As per our remarks, it is not good LC from the point of the seller or exporter. Then irrevocable LC. LC issuing bank gives a definite, absolute and irrevocable undertaking to honor its obligation provided the documents are as per the terms of the credit. It is a good instrument for the exporter. Irrevocable confirmed LC. Please note it. Irrevocable confirmed LC. An LC where another bank adds its confirmation at the request of the issuing bank, confirming bank undertakes to pay, accept, negotiate if the documents are as per the terms of the credit. It is a good instrument where the issuing bank's credentials are not known. Okay. Next, transferable LC. An LC in which the beneficiary has the right to request the bank to make the credit available in whole or in parts to one or more beneficiaries. And here, original supplier in the credit can transfer the credit in favor of another supplier. Such LCs can be transferred only once. Then a red class LC. An LC with a provision for allowing pre-shipment credit to the beneficiary for procuring, manufacturing of goods to be exported. Such credit provides payment of a portion prior to shipment of goods. So this is red class LC. Here LC providing for pre-shipment credit facility for the exporter. Then green class LC. Green class LC. An LC in which, apart from providing pre-shipment credit to the beneficiary, the issuing bank has also to arrange for storage, warehouse facility, prior to the shipment on board. LC providing for pre-shipment credit facility and storage warehousing facility. So this is called as green class LC. Back-to-back LC. This type of LC involves two irrevocable credits. Firstly, inward credit, original LC, and second as outward credit, back-to-back, which is opened on the basis of the security of the original LC. Normally, such LCs are opened in favor of the supplier, requiring them to supply the goods covered by the prime LC and obtain payment thereof. See the standby LC. LC similar to bank guarantee, where issuing bank guarantees payment. Okay. In standby LC, the performance has to be made by the applicant, and in case of non-performance, the beneficiary makes use of the standby LC. It is a substitute for guarantee. Okay. A standby LC assures payment to the beneficiary. Who is the beneficiary? Beneficiary is exporter and applicant is importer. A substitute guarantee. It is a substitute guarantee, standby LC. A standby LC assures payment to the beneficiary in case of non-performance by the opener of the LC. Okay. Then a revolving LC. Under this LC, part amount which has been utilized is automatically restored and is available for further use. It is where business dealings are on ongoing basis, such LCs are opened. And the next one is clean or open LC. LC means letter of credit. An LC in which shipping documents are not required by the applicant. It is a clean or open LC. Such LCs are opened only in exceptional cases and for customers of very high standing. Okay. Then restricted LC. LC in which negotiations is restricted to a particular bank. When the name of the bank is specified for negotiation, it becomes a restricted LC. Okay. Then circular LC. Circular LC. It is a LC issued by the issuing bank, authorizing its branches or correspondent banks to pay to the beneficiary against clean side drafts drawn by the beneficiary on the issuing bank. Please understand all these things. It is nothing but LC meant for beneficiary who often travels abroad and or for longer period of time. It is useful, the circular LC. Then deferred payment LC. An LC in which full payment is not made on presentation of documents, but only after specified period of time or installments as per LC terms. This is normally used for a large value LC for import of capital goods, deferred payment LC. Then installment credit. What is installment credit? An LC which calls for full value of goods to be shipped, but stipulates that the shipments be made in specific quantities at different intervals. Please understand all these things. Okay. Here, this differs from part shipment in the sense that specific quantities and intervals are specified in LC, whereas in part shipments there is no such stipulation. These are some of the credit facilities available in respect of foreign trade. I have given in my previous video also a small briefing on Forex transactions, That link I am providing here, please see that one also. Thank you.